You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Option Block. We are, of course, everyone's favorite source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. And I will be your host du jour through this exciting whirlwind tour into the world of options. If you haven't had a chance to do so already, listeners, by all means, check out our Options Insider Radio Network mobile app. Lots of cool stuff in there. Of course, you can always instantly stream all of your favorite episodes of the Option Block wherever you have signal. You can listen to the Option Block. You can download them for offline listening. If you're heading on a plane or on a train, you know what to do. Just download, queue up your favorite episodes. Maybe go back into the archives, dig up a few old ones, add those as well. You got hours of listening pleasure on your plane or on your train ride. And of course, you listen to something, you say, you know, that Tusaw guy, he's kind of crazy. I don't agree with him at all. You hit that email, hit that feedback button. We made it easy for you right there, built into the app. You hit that tab, and then you can email us directly. You can shoot us a Twitter question, a Facebook question. You can even leave us a voicemail. No shortage of ways for you guys to get in touch with us here on the old Option Block program. We love to hear your comments, your questions, your feedback. It's really the reason we do this show. All right, and joining me on the old program today, starting off with the man beaming in from the great principality/region/ small equatorial island nation / crazy place to live, none other than Uncle Mike Tusaw, beaming in from the great area known as St. Charles, Illinois. Uncle Mike, welcome back to the show, sir.
Excited to be here from the small equatorial island nation of St. Charles.
Yes. Very tropical out there, indeed.
Yes, it is.
Have you been to the rainforests of St. Charles? If not, I highly recommend them.
We got rainforests. We have mountains. I think we've had just about everything in the city from what we've talked about on this show.
I'm sure we boosted the St. Charles travel region at least 1.5%, if not 2%. So that would mean 2 to 3 more travelers.
I would think so.
All right. And also joining us, beaming in from the HQ of Options Express by Charles Schwab, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Mark, good to be here today. Again, an interesting day, a lot going on. Today was Twitter and Lulu Day here at Options Express.
Lulu rearing its transparent head once again. We'll get to that in a little bit in the old trading block as well. But first off, let me introduce our last cohort here on the old all-star panel, beaming in from not St. Charles, but another very lovely, very distant equatorial burb, none other than Riverside, Illinois, Mr. Mark Sebastian from OptionPit.com.
When people think Riverside, they think distant, really far out suburbs, don't they?
Oh, yes, about as far as you can go before you're in Wisconsin.
Yeah, exactly. Another, more Iowa. It's.
Yes, exactly.
Yeah, no, things are good. Fun day, fun all around. So it's good to be on the show today.
It was a fun day. So without further ado, let's get to it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You know what time it is. It's time for us to break down what caught our eye, what was moving the old markets, what was lighting up our collective tapes here in the options realm. Let's kick things off looking at the broad indexes. Bit of a sea of red in the broad street today. Most of the major indices closing down, about 0.75 percentage point. That's where the SPOOs closed, or right around there. The Dow down a little bit less, down about 0.6 point to 16,734. And the Qs off nearly a full point. And, of course, VIX Cash taking a tick on the upside, not surprisingly. Closing today right around the 12 half handle. So we're back, broken away from the 10 handle through the 11 handle back into 12 handle range. So we'll see how the broad media pontificates upon that move again. VIX is too expensive now. We'll see. Maybe we'll start there, Mr. Sebastian. We'll start in VIX realm. What caught your eye out there today, as well as in the general market activity?
We saw some nice action out of the futures. We saw the VIX start to react. Now, one thing to remember is that, down, we kind of think of down 15 or 17 points is a lot, and now that's less than 1%. So, whereas, only a year and a half ago, $17 was 1.5%. Now $17 is less than 1%. So, moves are not point moves are not the same as they used to be. So, when people look at this quote unquote sell-off and wonder why didn't the VIX pop so much, well, because $17 isn't as big of a deal as it used to be.
That's true. Gets back into that point we make often on this show about the context of volatility. And you're right, it is funny to say that 17 handles, not that big of a deal percentage-wise when it used to be earth-shattering not too long ago. Uncle Mike Tusaw, what caught your eye in today's whirlwind of red? Apple selling off today to $1.60, so perhaps we'll start there. What caught your eye in fruit company land?
It actually went down. That's not supposed to happen. Come on now. No, just what caught my eye, just in general, we had a sell-off in the marketplace today, but like what you guys are pointing out, 13 points on the S&P is not as big of a deal as it was because it's only 0.7% right now. So I think that we had the action in Apple, my beloved gold, starting to come back a little bit. I felt that we were kind of possibly hitting some support where we were, so not too much action in my world. We had to roll down a put today on a short put that was protecting some things, which I'll talk about a little bit more in the strategy block, but not too much. I think today is just a down day. We had some news out of the Middle East that all things are on the table, so to speak, but not a lot happening.
All right, and Mr. Viceroy, what caught your eye over there in the land of OX by Charles Schwab?
So anything energy related was hot today. The futures desk was doing crude options. The equities desk was doing all the big name oils, all the drillers, the Schlumbergers, the Baker Hughes. And then there were two names that stood out today. Lulu, which had earnings, and I think we talked about this a couple days ago on the show. I thought this was the opportunity to resurrect themselves. Nope, they missed, and they got hammered almost 15%. So that stock is about half of what it was 4 or 5 months ago. A lot of activity in Twitter today. They lost one of their key executives, and they rallied. So I don't know that I can say they rallied on the news of losing their key executive, but they were one of the standouts to the upside today.
Yeah, Alex, my wife, who's as we all know is a borderline fashion analyst, can tell you Lulu's problems is their styles have gotten really boring, uninteresting, and they've got a lot more competition than they started. And long term, Lulu looks a lot more like Gap than it looks like Tiffany in her eyes.
Well, looking here at the charts, it's easy to see why it's fallen out of favor with the OX clientele. You're right, Alex. It was threatening 60 not too long ago, and now trading today off 7 handles, 15, nearly 16% to close at 37.25. So Lulu taking it on the chin. It was a big high flyer, a big darling of the OX, and indeed a lot of the option clientele not too long ago. Probably getting some action today. We pull up the numbers here, and not surprisingly, their ADV is about 20,000, doing about 7 times that, over 140,000 contracts today. So not surprising on an active day like today that they're lighting it up, but we'll see how that fares going forward. I would imagine a lot of the more active OX clientele and the rest of the option clientele out there probably will be surrendering their Lulu interest for the time being. All right, and with that, we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, a portion of the show we break down the weird, the wild, the downright unusual, and perhaps dubious paper we're seeing lighten up the old options market today. I was doing a quick check before we started recording, and we were talking, of course, Mark, you remember on your last appearance on the program last week, and then even on the last episode before that, we were talking about some dubious activity going on in Dollar General ahead of Carl Icahn's announcement last weekend that he had actually acquired a 9% stake. We had profiled someone earlier who was essentially just buying everything on the planet out there. He bought premium on every strike across the board. And we had commented how on the last show when Andrew was on, that stuff had moved his way, the underlying moved his way, volatility moved his way. He had yet to unwind any of that stuff. Alex had pontificated that perhaps some sly fellow in the regulatory landscape or at the brokerage firms decided this was perhaps too well-timed activity and froze those accounts. Well, I wanted to check before the show today to see if he had indeed unwound any of those positions. He did 10,000 when we first profiled them, or pretty much each, and then doubled down again with another 10,000 on some of those strikes, the total of 20 on some of those, like the Jan 75s and the Jan 85s coming out of that. And it looks like right now those are still open as we speak, still 20,000 open on both of those strikes. It looks like only closing that went on may have been in the Nove, where he did at the time, you'll remember, the Nove 50-60 strangle listeners. There are still a substantial amount of Nove 50 puts on, though, so he didn't close all of it. So either way, it seems like a substantial amount of this paper still open. Does that surprise you there, Mark, that this guy would be so well-timed and then all of a sudden not be willing or able to close this out?
That is odd. Sometimes it's always funny when people, the way people will have such a good trade and then be unwilling to it's like they don't believe that a good trade can stop working or different things like that. So I'm always shocked when that happens.
Alex, are you still leaning that this guy was blocked from unwinding a lot of this stuff?
Yes, but let me emphasize that's speculation, and I don't for a fact know that. I know you laughed when I made the 3 days of the Condor analogy, but I suspect, given how obvious the trade was, that there are people with magnifying glasses looking at this.
Even a blind squirrel finds a nut, they say, and hopefully the regulators even could stumble across this one. This one was pretty obvious. And remember all the news people made, particularly that is attached to Icahn, and he's now embroiled in some other investigations on some dubious insider trading. And, of course, the big brouhaha people made last year around the Heinz acquisition with Warren Buffett, and that was much smaller size than this. I believe that was to the tune of a few hundred, maybe a few thousand contracts, nothing close to this size. So that got on everyone's radar. I would hope someone would be noticing these trades as well. All right, moving on to more recent unusual activity. Going to start off with looks like some newsletter activity out here in Galena BioPharma Inc., ticker symbol GALE, G-A-L-E, closing today a whopping $3.10, down 15 cents. People will often write in saying, hey, we hear you guys say we thought we saw a newsletter trade. What do you guys mean by that? What do you guys mean by that? Well, it's pretty clear. This is a good example of it. It's really just when you see a lot of activity, usually on one strike, listeners, usually in a lot of really small amounts, that usually indicates a bunch of retail flocking in to execute the same trade. Sometimes you see it at the same price point, which is another clear indicator. They all were told to sell it for $3 or whatever the case may be. So they all trickle in, regardless of volatility level and what else goes on in the underlying. And we typically, the signs of a newsletter trade. Looks like we had one going up out here today. In particular, we saw... Well, first off, let's do the open interest numbers here. This is a name that does about 3,600 contracts a day, doing 4,700, nearly 5,000 today. So it wasn't totally volume that caught our eye as much as the paper that was going up within it. In particular, we were looking at the Jan 2015 3 puts. We saw them going up today for prices around $1, 95 cents to $1. They went up about 6,000, nearly 5,901 of these Jan 3 puts, going up at prices 95 cents to $1. Open interest just 1,900 contracts, so clearly this was opening. And again, what gave us indication that this was probably a newsletter trade is it went up scattered in some small chunks, but a lot of them over and over again. This is typically a newsletter trade where someone recommends someone coming in and blasting out puts. It's a very popular newsletter trade as well. Next up is actually a newcomer to the Odd Block. This is surprising. We haven't talked about this name before. We talk about Southwest and others, talk about a lot of airlines here on the old Odd Block, but for some reason we haven't talked about Jet Blue. This is, of course, everyone knows Jet Blue, ticker symbol JBLU, closing today just a hair below $10, $9.94, down about 50 cents today, or 5%. So not a bellwether day for Jet Blue. This is the name that does about 4,000 contracts a day, doing 44,000 today. So there's a lot of paper going up today in Jet Blue. And what we saw in particular that caught our eye were some risk reversals going up out here. In particular, it was the Jan 2015 10 puts going up 5,000 times for about $1.10, paper buying those, and then selling 2,000 of the SEP. So we saw a bit of a, I suppose you can call it a time risk reversal here. The SEP 10s going up 2,000 times for 65 cents. Went up in 2 blocks marked as a spread here. Again, open interest on the calls, relatively high. Looks like the guy, when he's doing a ratio like this, 5,000 by 2,000, it usually seems like the guy is probably buying enough puts to hedge his underlying position, but then not selling enough calls to cover the full thing. Probably wants to let it run a little bit on the upside in case JetBlue pops, but he wants to sell a few calls to finance some of his puts, but not the whole thing. So it's not a complete one-to-one collar. Looks like this guy's hedging a bit and then rolling the dice on the rest to the upside. That JetBlue is going to be popping sometime in the near future.
That trader thinks that JetBlue is really going to take off. So I couldn't resist. I'm sorry.
Well,
no, I mean, I like JetBlue. I think that I actually had a pilot from JetBlue as a client a couple years back. I like the concept of the low-cost airlines, and I think that if we do continue to have oil prices go up, if what happens today is a precursor to what's going to happen, and we do have increasing energy prices, then I think that the low-cost carriers will do better. A few years ago, when Southwest was hedged to high heaven on oil prices, they did very well. I'm not sure exactly if JetBlue is hedged or not with their with oil prices, but nonetheless, the low-cost carriers do seem to do better if we do have higher energy costs.
Yeah, that was Southwest's big claim to fame. They, for whatever reason, were the only real carrier out there that seemed to have any working knowledge of the futures and options markets, because they were the only ones who really hedged their oil exposure. You would think that would be job number one for any incoming airline CEO, is to hedge your number one risk as a company, and yet so few of them actually do. It's amazing. But you're right, that was Southwest's big competitive advantage for a long time. I was just reading the other day how the latter parts of that hedge have finally run their course, and they apparently haven't executed it again, or haven't been able to get the same levels again, because they can't lean on that these days the way they used to. So as a result, pricing power is actually starting to wane a bit, and JetBlue is actually starting to become the pricing leader in a lot of these markets. They used to refer to it as a Southwest effect. They may have to change that now to become the Jet Blue effect, because it seems like Jet Blue is actually squeezing them out in pricing in a lot of areas, which is interesting. I was just talking to someone about that this afternoon, how they chose Jet Blue over Southwest recently. So apparently that's the trend. Meanwhile, we're going to keep on rolling into another one we don't really talk about that often here on the old Odd Block. This is the iShares Dow Jones Transport ETF, ticker symbol IYT, closing today a whopping $143.25, taking it on the chin a bit today, selling off 2% or nearly 3 handles. This is the name that does about 1,000 contracts a day. One of the reasons why we don't talk about them that often here on the Odd Block, they don't really do a lot of options volume. But today, lighting it up to the tune of nearly 20,000 contracts. This is a very active day, as you might imagine, for iShares, and not surprising given the fact that the name was selling off a bit today. We saw some put buyers, some pretty sizable put buyers out here in IYT to the tune, really looking to July, in particular the July 137 puts. That's where a lot of the action was today. We saw, when we profiled it, 7,000 of these puts going up for 81 cents. Again, open interest, just 3 contracts, so this is all clearly opening paper. And by the end of the day, that volume had more than, actually just about doubled, to the tune of about 14,000 contracts going up on that strike on the day. Again, pretty much most of this buying, lifting offers are very close to it. A very, very aggressive, looks like hedging activity out here in IYT. When we see this kind of thing, could be an underlying hold. You're looking to hedge his underlying. Could be someone speccing on activity on a day like today. Again, this was a very near-term paper out in July, but still interesting stuff going on out here in IYT. We'll have to keep an eye on this one as well to see how the transports fare. We don't talk about transports too often out here on the show, but perhaps we'll change that going forward. Mr. Sebastian, anything you want to add here on this size put buyer out here in the transports?
You know, it's interesting. Andrew and I were talking about today. We were kind of thinking that maybe that was as part of a long entry position, but we weren't 100% certain what the deal was.
So you mean someone coming in, scooping up underlying and also hedging at the same time? Yeah,
that was kind of our thought process.
Right, it is a weird one. It's very near term. It's very sizable for the transports, doing 14 times their ADV in one big trade.
Exactly.
Of course, it also was selling off pretty markedly today, so wants to get long and also a little skittish given today's activity. All right, and that is going to do it for the old Odd Block today. Now we're going to keep on rolling right on into Alex's favorite segment, because it's time for the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It's time for the Viceroy to put on his fanciest of fancy caps and take us on our behind-the-scenes tour into the land known as Options Express by Charles Schwab. Now, Alex, I've been hearing some rumors floating around of late. There's been a lot of activity in the realm of portfolio margin. We've touched on it on the show in the past to different degrees. Why are there these levels behind it that kind of limit who can access it? What goes on to actually provide portfolio margin? But I'm hearing there's a lot of flux in that area.
Yeah, and what's going on in the industry now, and this isn't just at OX, one of my jobs is, obviously having been in the business a long time, I still have a lot of friends. As soon as that came out, I said, I should have added more to that sentence. I still have a lot of friends at a lot of the brokerage houses and the liquidity providers. And the regulatory environment is such that you're seeing 3 things happening. Number one, the NFA is coming in on the futures side. And sometimes you're going to say, well, what do futures have to do with portfolio margining? Long story is futures are part of portfolio margining, but one of the things that's happening is the NFA is coming in on the futures side and has taken a real hard look at margin levels concentration levels at brokerage houses. I know we talked a few shows back about one of our peers in the e-commerce space took an $80 million write-down because of a concentration level on an instrument that just fell out of bed. But there's a lot of that going around, and if you trade futures, you're probably going to see some new paperwork. If you're trading futures on behalf of someone, like you've got limited trading authority, you're probably going to see a difficulty in keeping that limited trading authority unless you register as a CTA with the NFA. But that's what's going on in futures. The other thing that's going on in terms of portfolio margining is the stress tests are going to start to look at a bigger move. Now, I know some people allege this has to do with the low volatility and the fact that the market is at an all-time high. So, some people interpret this to say, well, the regulators are worried that the market's going to come down. The regulators are simply worried, and that's not uncommon. It's generally not market related. Some of it has to do with the exposure that firms have in many instruments. So here at OX, we're going to strengthen our stress testing tools, and that will be the same at Schwab. What's happening at some of our competitors is they're not raising rates, but one of the ways they're strengthening their stress testing rules is by adding an exposure fee. And a lot of customers are griping, and it's funny because a lot of these very big customers that kind of operate right on the edge. When I say on the edge, is they're the folks that in a portfolio margin account will carry, 2,000-3,000 options and margin it right to the very limit and adjust constantly. A lot of those customers are, it's kind of a musical chairs in the industry. Here at OX, we lost some of those. We got some of those. But what's happening is that some firms is they're now adding what's called this exposure fee, which is a daily charge. So that if you're operating on, I'm just going to pick a number, less than margin for a 30% up, 30% down. Now remember, when portfolio margin was started, it was around a 15 up, 15 down. But some of you are going to experience if you're margined at less than a 30% up, 30% down stress test, you're at some firms going to be asked to bring in more money. B, you're going to get charged a daily exposure fee. And I know as soon as I say that, people are going, darn. The industry is picking on me again. But the risk tools are changing. So now that I've given you the bad news, let me give you the good news. We're 2 days into IdeaHub for futures options, and IdeaHub for futures options shows credit spreads in futures. Now, I know credit spreads aren't a big innovation to those of us on the security side of the options business, but in futures, it's a bit of an innovation. We're looking at 4 underlyings. We're looking at crude, which of course has had real volatility in the last couple of days. We're looking at crude, gold, the E-mini S&P and the E-mini NASDAQ, and I checked IdeaHub for futures a couple minutes before we came on the air, and it had just under 50 timely ideas. So if you are an OX customer, come to the toolbox at the top of your landing page after you log in. Click on IdeaHub, and you'll notice it's grown from 4 tiles to 5 tiles, the 5th tile being IdeaHub for futures. If you're not a futures-enabled account, when you click on it, you're going to get a little warning that says, you want to see this, you got to be a futures account. Please apply to be futures suitable. But we now have 2 sets of premium harvesting up, one for futures and one for securities options. So lots of stuff going on.
Well, Alex, I think you just excited a lot of our listeners and also probably scared the hell out of them at the same time, because a lot of them are probably looking, I know I always am, for ideas out there in futures options realm. We're adding a lot more futures options oriented content, and there's quite a dearth of good information and analysis out there. So anything that could jump into that fray and provide some more content, I think is interesting personally to me, as well as I'm sure to a lot of the listeners. But And I know from interacting with a lot of our listeners that a lot of them, despite our warnings to the contrary, like to, shall we say, play close to the edge a little bit when it comes to those margin requirements. If they could sell 100 puts, they'll sell all 100 of those puts in that account. They don't leave a lot of room for error. Even though you talked about leaving a little bit of a cushion for adjustments and things like that in the past, for whatever reason, a lot of them still like to play a little fast and loose with those account maintenance balances. So the notion of A, having to add more capital, or B, getting some sort of daily fee, it's probably going to come as a bit of a unwelcome shock to them.
Yeah, well, it's, we used to say minimum margin is a sign of minimum intelligence, and now I've offended everybody that I didn't offend a few minutes ago. But here's the thing. Keep in mind, margin requirements, and I know every time I say this, it creates controversy, weren't created to protect the customer. They were created to protect the brokerage house from an unsecured debit. And given the environment in terms of what's going on, low volatility levels, low transactions costs, brokerage isn't a zero risk business. And you're finding that the model is changing now, and people are evaluating their risk parameters. So if you got a big account, you got an active account, you got an account that's, short 500, 2 standard deviations out of the money at a nickel, be prepared to, adjust your trading style.
I like it. All right. Well said, sir. And now I don't know about you listeners, but I'm in the mood for some strategizing. That means it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, like the man said, it's time to dispense some options, wit, and or wisdom. And who better to do that than our good friend Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, it's been a while since we've opened up the old strategy block. I know a lot of our listeners are probably having strategic withdrawal right now. So what do you have to offer for those listeners?
Hodgepodge today. Just kind of want to give an update on some of the trades with which we've been doing, and just give you just a little bit of an update and an adjustment with which I made today. Apple. This is one. It's not part of the hedge on Apple. Right now, an update on the hedge. All we're doing basically is just we're still long puts. Probably over the next couple days, we will be getting into some type of upside in terms of either selling some covered calls or selling some call spreads on the underlying as well. Don't get me wrong, I am an Apple bull, but 100 is going to be a tough nut to crack. And once we crack it, I'll be a believer. But until we do, I feel my opinion is that I think we're pretty safe to sell some upside around those levels, so long as you're hedged to the downside, of course. Not part of the hedge, just a different area of Apple with which we were playing. A couple weeks ago, we did a ratio-hedged risk reversal, meaning that we sold a 10-lot call or a 10-lot put spread to finance the cost of one call option. We did the 10-lot for about 4 days, I believe it was. And so what that did is it created a 20-cent limit order, so to speak, a 20-cent basis on the call option with which we bought from when Apple was at $6.20. Since the split, we're now long the $87.14 call on Apple. So with that one is going higher. Looking to take something off the table probably in the next few days. Not sure what exactly. Nonetheless, that's an example of how if you're careful and you can monitor the risk carefully on the put spread side of it, granted you're taking on a larger amount of risk for a few days, you have to monitor this thing very closely, which we did, have your risk management in place. It's a way with which you can use short options to finance longer-term options. Now, a few other updates, some covered calls with which we've sold. There's been rallies in some of our stocks with which we're in, Chevron, Intel, Johnson & Johnson, just a lot of the blue chips. What we'll be doing is either letting those get called away or rolling them to the next month. A lot of those expire next week, so next week we'll have more updates as to what we're doing with the covered calls in that portfolio. What I want to talk to you about today is just the adjustment with which we made today. We are currently long SPY and long one put option at the 178 level for October as a hedge. And a way with which we are trying to finance the hedge right now, we've been doing a variety of different things. We actually had a call spread on. We had some short calls. We had a variety of different things. We closed out the short calls when the market came down yesterday. We hit our rule of where whenever we can get 80% of the premium with which we've taken in, that's when we typically like to close out the short options. And so yesterday we initiated a position to where we wanted to have a little bit of a volatility hedge, so to speak. And what we got into was we're long the June 191 puts, and then we were short, the July week 2 191 puts, and then we were short the June 194 puts. Now, markets went down today, and we were down, it was pennies of what we were down on the actual trade. And the reason was because of the fact that we actually were long Vega on this trade. Because of the fact that instead of just doing a traditional bull put spread, which once again, we do those too, but this is one where we actually took the hedge leg and went out for a further time frame on it. And what that does is if it does go against you, you then have the ability to possibly benefit on increasing implied volatility. Does it work every time? No. But that's a way with which you can kind of protect yourself in case something goes against you in that section of the trade. Now, with that, of course, the 194 call, once it went in the money, we rolled it down to the 194 put went in the money. So we then rolled that down to the 193 put. And what that then does is that we still have positive delta for that section of it, which is what we want. We still have time decay. And the difference is that we have volatility potentially working in our favor should the market go down and volatility come up. So let's break this down in terms of how someone can use this. Let's say that you're a credit spreader right now and you're not comfortable being that close to the money with your credit spreads. Because after all, it is a credit spread. It does give you a credit, just making sure Sebastian's listening. Let's say that you're not comfortable doing a traditional short put spread because in order to get any premium, you have to get your short puts too close to where the actual stock is right now. One thing that you may want to consider is doing the same strategy, but making the hedge leg a few more weeks or a few more months out. You won't get as much of a credit, and it might even be a debit, but you'll still have positive delta. You'll still have time decay working in your favor, most likely. The difference is that if the stock starts going against you, then you can have volatility potentially working in your favor. And we're doing a lot of trades like that right now in this environment. We're doing a lot of things to where we are, for the hedge leg of what would be a credit spread, we're going out a longer time frame. And what that does is that turns the Vega positive as more of a precautionary measure. And that's something with which if you are a credit spreader or if you're selling short spreads, it's something with which you may want to consider too. But remember, there is upside risk to it in that if you're not getting a credit for it, you need to monitor it to where if the market starts going up, you need to take profits a little bit early.
All right, good stuff. Uncle Mike Tusaw, thank you for that. And all of our listeners can get over their strategery withdrawal while we keep on rolling. Speaking of the listeners, we got time for, I think, one quick question, so we'll keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, this is, of course, the portion of the show where you guys get to join us here on the old All-Star panel, make your comments and questions known here, just like our friend here, Mr. Ivan, did. He writes in with a short but sweet question. He writes, I've heard some people say I shouldn't sell naked short puts because of, quote, gap risk. I always respond that it's the same thing as working a limit order in the stock. Who's right, me or these worry warts? Let's see. Mr. Alex, why don't we start with you because I know you have some interesting views here on naked short puts. Who's right, Mr. Ivan or his worry wart friends?
Unfortunately, his worrywart friends are right, and I think we'll get a consensus here. The thing about working a limit order, this is a question that comes up in the options market all the time, and people will say, well, I don't need to buy a put to hedge. I know that's the other side of the put equation. I'll just put a limit order in, and you went to bed last night and Lululemon was 44, and you put in a limit at 42, and you woke up this morning it was 36 and change, and you kind of look around and go, well, that didn't work. So yeah, that's a classic example of gap risk, and a limit order won't help you. So if you were short puts in Lululemon this morning, if you were short the weekly 40 put, which was $4 out of the money yesterday, this morning you came in and it's ugly.
It is indeed, and you're right. That is a good example of some gap risk in a name. And unfortunately, yes, Ivan, your friends are right. Even though we do extol the virtues here of using short puts in lieu of working limit buy orders in stock, because they are preferential for a lot of the reasons we've outlined many times here on the show in the past. You're getting paid to work the limit order, et cetera, et cetera. But in the scenarios like your friend described and like Alex described here, where there is a gap in the underlying, it can be sometimes problematic, and that's exactly what they're referring to, gap risk. When you're working that limit buy order in the stock, let's say the stock gaps, you're probably going to get filled at that lower level. Depends on where you're working your limit. If it was in the middle of the gap range, or if it triggered the top of the gap, then you might have gotten filled at the top. But if you're in the middle of that gap somewhere, you'll probably get filled at the lower extremity of that move. Whereas if you're writing a put for whatever limit price you have and the underlying continues to gap, you'll still get filled on your put at your price. Meanwhile, the underlying will gap the whole way. So you'll essentially experience all of the negative side of that gap. And that's kind of what they mean by gap risk with writing a put versus a limit equity buy order. That's one of the few upsides, pun intended, to working a limit order in a stock versus writing the put itself. So if you're trading in a high flyer like that, where you do expect some aggressive gaps, naked short puts, probably not the way to go. Of course, we've always advocated spreads on the show a lot anyway to mitigate a lot of that risk, and that certainly is a way to quiet some of your worrywart friends. Again, not as sexy, I know, because you're limiting some of the premium you're taking in, but still, if you're worried about gap risk in a particular name like you were doing it in Lulu before earnings, you probably should have a spread on anyway. All right, and that's going to do it for the mail block today. Now we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Not a whole heck of a lot on the old radar for this week. Of course, if you're a World Cup fan, then that's kicking off this week, so you're probably excited about that. And that may impact the markets because we know a lot of the world pretty much stops what they're doing to watch that. So that could be interesting to see what impact that has, if that compounds the summer doldrums, the summer malaise. Of course, wasn't much of malaise today. Uncle Mike Tusaw, what else are you watching for the rest of this week into the weekend, sir?
Well, the Middle East. I think that's the hot topic right now, to see what we do in Iraq. I mean, I feel it's very sad when the army that's supposed to protect your country just takes off all their clothes and blends in with the civilians. So I don't know if it's necessarily going to be a huge thing, but with what it is right now, but just with anything, the Middle East can always be a factor. So with that, we have oil up like it was today. So that's probably the main thing with which I'm watching, is the news out of Iraq.
The Middle East can always be a factor. Words to live by, sir. Well done. Well said. All right.
And stocks might go down.
Yes.
Or go up.
Yes, I like it. Part of your 48% guarantee, I believe.
I'll give it the 50%.
Oh, wow. Getting aggressive today. Mr. Sebastian, what are you watching for the rest of this week into the weekend?
Don't be surprised that there's a few more merger announcements or a few other things like that. And over the next couple of days, you just never know. Those are the type of things that are really moving the market right now. And then, it is what it is.
You got anything in mind, or you just got that merger feeling in your gut?
There's nothing right off the bat, but there are a few that I'm kind of looking at, but nothing that I can really say yes or no to yet.
And nothing as clear as last week's activity in Dollar General. That something was clearly afoot.
No. Anadarko. That's the only one that I've actually seen some active weird trading.
There you go, listeners. Another one to keep an eye on. Mr. Viceroy, take us home, sir. What are you watching for the rest of this week into the weekend?
I agree with both of my peers. The Mideast is erupting into a three-way civil war between the Kurds, the Sunnis, and the Shiites, and this isn't going to be nice. It's a very nasty neighborhood, and the forces that want to disrupt are disrupting. So I'd watch the price of oil here. I'd obviously watch VIX. I think there are going to be some catalysts in the Mideast, and we'll see if that happens. I hate to think what's going to happen, but it looks like it's erupting. It's a civil war, and we spent a lot of treasure, wealth, and wonderful people there, and this was their shot at making it, and it looks like they're blowing it. I also agree with Mr. Sebastian, but I think the activity will be big pharma and big tech buying. They have tons and tons of cash, and I've been a big fan of biotech for I think my life here on the show, and I think some of those companies are going to go away, especially in a difficult market. The challenge, even though there's lots of cash, is people still want to do stock deals, and if prices come down, it makes the stock deal less attractive, makes the currency less attractive. But I think you'll see more M&A. And unfortunately, we've got a tempest going on in the Mideast.
A tempest indeed. All right. Unfortunately, that's all the time we have for the Around the Block segment. It's also all the time we have for this episode of the Option Block. But as always, before we go, let's check in with each of our cohorts here, our partners in crime on the old All-Star panel, see what they're cooking up that may interest you. Starting off with you, Mr. Viceroy this time. What's coming on the pike over there at OX Education?
So on Tuesday, I will actually start scheduling IdeaHub for Futures webinars. Probably they'll begin in late June and then into July. But a couple that are up on the calendar already. Monday the 16th, Intro into Long Calls. Nina is going to do a webinar on what to look for in long calls, where to buy, what strikes. Wednesday the 18th, Mike Zaremski is going to do his introduction into trading futures. And Thursday the 19th, I know we'll have a show before that, so I'll talk about this again. But we're going to showcase our new streaming charts. So we're going to do intro into streaming charts.
All right, Uncle Mike Tusaw, what's coming on the pike over there at RCM Wealth Advisors?
Okay, first off, my compliance people have politely requested that I clarify something with which I had said last week. I had said my personal email address. Yes, it is my email address that I personally answer, but it is my official RCM email address with which I gave out. What I was trying to say is that it's not some general email that just anybody answers. It is mine, but it is monitored. It is my official business email address. Anyway, I have had a blast talking to the people that have contacted me in regard to people who are interested in bringing their retirements to the next level. If you're looking to contribute a few $100s a month and you're looking for an advisor, call me. I mean that with all sincerity. I have had a blast talking to the people, and the email address, my official RCM email address that I answer personally, is mtosaw@rcmam.com, and my direct extension is 312-212-3531.
Where would we be without compliance to clarify these glaring errors for us?
I hear ya.
All right. And Mr. Sebastian, take us home. What's coming on the pike over there at the pit?
Well, it's just been fun messing with this new chat room. Andrew and I are having a lot of fun with it. You know, if you wanna try it, you can use code. Let's do SLV. It'll be SLVR 70, and it'll take 200. It'll take $125. $125 off the price. SLVR 170. So come and check it out for $24, basically.
There you go, listeners. SLVR 170. If you like chatting with your fellow options traders, you want to chat with Mark and Andrew as well as all the other great traders they have in there, check it out over there at optionpit.com and save some money while you're at it. There are definitely worse things. And on behalf of Uncle Mike and the Viceroy and the Greasy Meatball and, of course, myself, who shall go nameless, nicknameless anyway, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program, making it such a success, and, of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.